Good morning, everyone. Is my audio and video clear? Please let me know in the comment section. Good morning, Chetan, Bhakti. I'm good. How are you? Oh, good morning, Rahul. All right. So, a very good morning to everyone watching this video. I am Manat Sharma from Olive Board, and I'm here with the live mint analysis that usually we do every Monday, Wednesday, and Friday. But yesterday I could not take up a session. That is why I'm taking your class today. So, we are going to take up important articles, try to link it with the static portion, and understand what's happening around the world. Now, this is important for all regulatory exams, and that is why we are here with this mint newspaper. Fine. If you want to download this Olive Board YouTube class PDF, you can do it from the app. Just go to the Olive Board app, go to the courses section. There's going to be a separate folder of YouTube class PDFs. You can download the PDF from here. Fine? Sure. Now, the first important article over here is Shades of Grey Inside the World of Pre-IPO Trading. Now, here what I wanted to explain is the meaning of grey market in equities. What is the meaning of grey market in equities? Can anyone tell me what is the meaning of this grey market? I'm sure people who trade or who have read about read finance topics and all in detail, you would definitely know what is this grey market. What is the meaning of this grey market? If we talk about the equities, if we talk about that, what is the grey market? They Chetan is saying grey market, pre-IPO markets. Yes, pre-IPO markets. But what is the basic meaning of this pre-IPO market exactly? See, IPO is what? IPO is what? Initial public offering. That means for the first time when a company is listing its shares on a stock exchange, that is what is called initial public offering. Now, IPOs, there's always a set date decided that, this IPO will be, listed, this IPO will be allotted. So there's this entire process, 3-4 days process, there is. And, yes, Chetan, not regulated, unofficial stock application market. Yes, Bhakti. Abhishek is saying OTC. Uh, uh, Chetan is saying before the shares become public, the interested parties can get the shares. Exactly. So IPOs, before the IPO launch or before the IPO process has initiated, when the people can buy and sell stocks, when people buy and sell stocks before the IPO process has started, before the IPO process has started, then we would say that it is a grey market. So it is an unofficial market. Grey market is an unofficial market where stocks and bonds, where where stocks are bought and sold before the IPO process has officially started. In simple language, this is the meaning of grey market in equities. Okay. Now, when people they buy and sell stocks before the IPO process is already started, this can actually manipulate the market. This can manipulate the market, and even can the prices of the stocks can either be too much or either can be too low. So they are not always accurate. This gray market, buying and selling stocks in this gray market is not always absolutely correct in displaying what the actual IPO process will look like. Okay. So Chetan is saying before the shares become public, the interested parties can get the shares via a non-regulated market. Yes, this is not regulated. This is absolutely not regulated. This is an unregulated market. ठीक है. Good morning, Indranil. It disrupts the market. Exactly. जैसे ही listing companies sell pressure से IPO fails. Exactly. And sometimes this happens. So the grey market for equities, especially for pre-IPO shares, has gained attention. Why? See, HDB Financial Services IPO, had been initiated. This process had been initiated a few days back. Okay, so HDB it is an NBFC, it is a non-banking financial company, and it is a subsidiary of HDFC Bank only. Okay. Now, यहाँ पे we saw a sharp fluctuation in the premium because of the exchange of or buying and selling of stocks in the grey market. Okay, so that was creating a sharp fluctuation in this HDB Financial Services IP. So what is this grey market? It is an unregulated and informal trading space. This has raised concerns about investor safety, price volatility basically. ठीक है, so grey market is an unofficial platform for trading shares before the official IPO listing. It operates without SEBI regulation. No regulation is there. No involvement of stock exchanges like NSE and BSE. There's something called a grey market premium here, which reflects the price difference between issue price and unofficial trade price. So the difference between the issue price and the unofficial trade price is called the grey market premium. But this grey market premium is not always reliable because it leads to misleading valuation. Okay, pre-IPO trading includes Kostak rate. There is this word called Kostak rates and subject to soda deals. Soda is like betting type you can say. है ना, तो soda kind of हो रहा है. And there's this term called Kostak rates over here. So Kostak rate is the amount paid. Cost the rate is the amount paid to someone for selling their IPO application. Okay, so what is the cost the rate? The amount which is paid to someone for selling their IPO application, that is called cost the rate. And this market also exists globally. So it's not that this is only in India. On a global level, this market exists, this grey market, but it is very streamlined. If we talk about US, it is very streamlined in that case. Okay. So what does cost the rate refer to in grey market pre-IPO trading? The minimum investment required in IPOs, the amount paid to someone for selling their IPO shares post-listing, the amount paid to someone for selling their IPO application, or the trading margin of grey market dealers. What is the answer? Yes, Chetan, HDFC groups, exactly. So what is the answer to this question? So I hope now grey market is clear to you. I wanted to discuss with you the meaning of grey market, since you are students of economy and finance. Such kind of trading terms, or this such kind of a market which exists separately or parallel to the existing market, you should be knowing about this in detail. Fine. So all of you giving me C as the answer. That is absolutely correct. The amount paid to someone for selling their IPO application. Exactly. Okay. Chalo. China curves unite India and Japan firms. Which curves are we talking about over here? Obviously, the rare earth metals. We are talking about the rare earth metals over here. And because of these China curves, who are uniting China and Japanese and Indian firms, they are getting together because of the curves that have been put by China. Why? In order to, maybe extract these rare earth metals to tackle the disruptions in the EV battery and critical mineral supply chain, which has been caused by China's export restrictions. So now India and Japan have joined hands. Okay. Now these Japanese firms are exploring partnerships with Indian companies to reduce reliance on China. And China currently dominates over 75% of India's battery imports, and that is why now India and Japan are coming together. Now, this curbs that have been put by China, this has disrupted the global EV battery supply chains. And Indian and Japanese firms, Nisha, Panasonic, Sumitomo, they are discussing battery tech and mineral partnerships in New Delhi. Okay, fine. India aims to localize battery technology through PLI schemes. So India will use PLI schemes to localize battery technology. Experts say that partnerships with Japan may only offer partial relief due to China's grip on refining and processing. So still there is a hurdle, there is still a challenge. So why are Indian and Japanese firms planning to collaborate in the EV battery sector to manufacture cars jointly for European markets, to develop luxury vehicle segments, to reduce the price of diesel engines, to counter China's dominance over the global battery and mineral supply chain? What is the answer? What is the answer to the second question? Why are Indian and Japanese firms planning to collaborate in the EV battery sector? Quickly, I want answers from everyone. So all of you are saying D, and that is absolutely correct, to counter China's dominance over the global battery and mineral supply chain. Absolutely correct. Very good, Indraneel, Aryan, Chetan, Bhakti, Rahul, Parkhi. Just a second. Okay. Okay. Special teams to recover high value bad loans of PSBs. This is the next next news over here. Special teams to recover high value bad loans of public sector banks. What are bad loans over here? What are bad loans? What do you mean by bad loans here? We're basically talking about the non-performing assets, right? We're talking about the non-performing assets over here. So the government has asked the public sector banks to create specialized teams in order to recover bad loans of 100 crore and above. Okay, so a special team has to be created by the public sector banks, okay, to recover the bad loans of 100 crore and above. And this comes as part of broader efforts to address the NPAs with the goal of enhancing operational efficiency and protecting the public funds. Okay. PSBs must form special recovery teams for NPAs over 100 crore, legal teams to be restructured for faster resolution under IBC. Okay, these teams are going to be restructured so that a faster resolution of the through the IBC can be done, and banks may also write off or liquidate smaller bad loans where recovery cost outweighs the value. 30% of total stressed accounts are over 100 crore in value. So basically, in short, the public sector banks, in order to recover their bad loans or the NPAs, these banks have to make specialized teams which will fast track this process. Fine. Net NPAs of public sector banks declined to 0.52% and net profit stood at 1.78 lakh crore. Okay, so these are the net NPAs of PSBs. Gross NPAs also declined by 17% year on year to 2.94 trillion rupees. Segregation of NPAs into categories to aid faster resolution, better planning. So we need to segregate NPAs also. Although we have already segregated these, that up to 90 days they are called NPAs. Then there is this category of substandard asset, then there is this category of loss asset, doubtful asset, है ना? So if less than 12 months that the money has not been paid, it's called a substandard asset. More than 12 months, it's called a doubtful asset. Up to 3 years, then it becomes a loss asset, right? Okay. So what is the primary objective of forming special teams in public sector banks as per the government directive? To promote credit growth in rural areas, to recover high value bad loans of 100 crore and above, to open more bank branches abroad, or to regulate the insurance sector. What is the answer to this question? Primary objective of forming special teams in public sector banks. For those of you who are new here, you can connect with me on Telegram. Mannat Educator is my Telegram handle. You can connect with me over there. I keep sharing the updates and daily MCQs and important news. Fine. Alright, so quickly I want answers from all of you. Rahul, Indraneel, Bhakti, Chetan, Aryan, Parki, all of you are saying B is the correct answer, and that's absolutely correct. to recover high value bad loans of 100 crore and above. Pakistan, Afghanistan are no longer in World Bank's South Asia region. So now, according to World Bank, Pakistan and Afghanistan are now not part of South Asia. ठीक है? ठीक है? So now the South Asian region is left with 6 countries. Now there are South Asian region mein there are 6 countries which are part of it. Who is going to tell me the names of these 6 countries? Anyone? Guess, or maybe you should be knowing that which all come under the South Asia region. Write it down in the comment section and tell me which are the 6 countries. Now before today or before the recent changes, Pakistan and Afghanistan were also a part of the South Asia region, but now World Bank has removed their classification from the South Asia region and now they will be part of the Middle East region in short. Okay? Fine. So now they'll be part of the Middle East or you can say Middle East and North Africa region, which is called the MENA region. Now they will be part of that. But South Asian region, which all countries are a part of the South Asian region is my question. Chetan is saying India, Nepal, Bhutan, Sri Lanka. Okay, Indranil is saying India, Bangladesh, Bhutan, Maldives, Nepal and Sri Lanka. ठीक है. So basically India, ठीक है, Bangladesh our neighbor. India, Bangladesh, Nepal, Bhutan again, neighbors. Nepal, Bhutan, neighbors. These are our adjacent neighbors. So just forget about the northwest neighbors. Focus on India. We have Bangladesh. East mein we have Nepal, Bhutan in the northern side. And along with that we have Sri Lanka. Sri Lanka in the southern part and Maldives. Now these are the countries which are going to be part of the South Asia region. You have to remember. Rahul is saying India, Nepal, Bhutan, Maldives, Bangladesh, Sri Lanka. Exactly. Okay, so these are the 6 countries which are now part of South Asian region. Before even Pakistan and Afghanistan were part of this. So there were 8 countries which are part of the South Asian region of World Bank's classification. And now Pakistan and Afghanistan, they are going to be part of the Middle East and North Africa region. So there's another region called MENA region, Middle East and North African region. Now Pakistan and Afghanistan will be a part of that. Okay? Okay, so Indian subcontinent is not only, yes, you can say that is the Indian subcontinent. So Indian subcontinent is not only India but the adjacent countries as well which are part of the Indian subcontinent. So yes, you can say that. So the World Bank has officially removed Pakistan and Afghanistan from the South Asia Administrative Region. Both countries will now fall under Middle East and Africa region. Okay, this is for managerial oversight and to align with other multilateral institutions, and that is why World Bank has done so. This decision aligns World Bank oversight with IMF and IFC models. India urged multilateral banks to stop lending to Pakistan due to concerns over terrorist financing. Okay, and India also opposed the IMF loan which was given to Pakistan recently, 2.4 billion. Okay, and who is the new vice president of the South Asia region? Johans Zut. Johans or Johns, however you can pronounce it. Zut. He has been appointed as the new vice president of the South Asia region, and this is going to be effective. This is effective from 1st July. Okay. And India remains in the South Asia region with Bangladesh, Nepal, Bhutan, Sri Lanka and Maldives. Yes, Indranil. Pakistan and Afghanistan are now under the Middle East region. According to the World Bank's classification, okay? Which region will Pakistan and Afghanistan now fall under in the World Bank's new administrative grouping? Southeast Asia, Asia Pacific, Middle East and North Africa region or the Eurasian Economic Region? Here I'm going to give you a homework. You have to look at the division which has been done by World Bank region wise. See the different regions and which all countries are part of different regions. Okay? This is your homework. Just take a look at this. Fine? Absolutely correct, all of you. MENA region. That is absolutely correct. Good. Chalo. Public capex at 8.5 trillion rupees may hit decade high as private sector wavers. Okay, so what we are seeing over here is that public capital expenditure expenditure by the public sector enterprises and infrastructure agencies is projected to reach 8.5 trillion rupees in financial year 26. So you're talking about the public capital expenditure done. It is going to reach 8.5 trillion rupees, which is highest in a decade. And the reason is that the government wants to boost economic momentum amid a lackluster private sector response. So private sector response has not been good in case of capital expenditure, and that is why government is aiming to boost economic momentum. So financial year 26 public capex target is 8.5 trillion rupees by capex by central public sector enterprises rose 73.6% in a decade, from 1.88 trillion rupees to 3.28 trillion in financial year 25. Okay. If we talk about the combined total expenditure, which is including your highways, power, it has more than doubled from 3.11 trillion to 8.07 trillion in financial year 25. So this is because of global uncertainties and all, and private sector investment has been very weak. That is the reason why we are focusing on this. So what is the projected public capital expenditure for financial year 26 as per the government's plan? 8.5 trillion rupees, 6.25, 7.85 or 3.28 trillion rupees. What is the correct answer for this question? Quickly, all of you give me the answer. What is the answer? 8.5 trillion. A is absolutely the correct answer. Okay? A is absolutely the correct answer. Very good. Census to kick off on 1st April with house listing operations. So, we've seen this in before in the previous classes also, that census, we're going to see that census is, we're going to start off with the census. We're going to get the details of the census of 2026. It will commence with the house listing operations on 1st April 2026. So house listing operations, what do you mean by house listing operations? Can anyone tell me? So, census will commence with house listing operations on April 1, 2026, as announced by the Registrar General of India. So, my question here is that what do you mean by house listing operations? Who is going to tell me? House listing operations. See, whenever there is this process of census, census is we try to understand the population, we try to understand the demography. For that, we need to do surveys in different households. है ना? We have to do some surveys in different households. And for that, we need to classify. Now, we won't be able to take up the entire population, right? We need to create a sample for that. We need to create a sample out of that population from where we are going to conduct the survey. है ना? So we are also, house listing operations is basically going to make a list of the households, the assets in the household. You're going to make a list of the structures, the household, the amenities. You're going to properly list it so that the survey can be conducted in a smooth manner. Count buildings and house in an area. Not exactly count buildings and houses, but select households, check out the listing, check out the structure, the amenities and all, and then list accordingly. Out of that list, we are going to create a sample for conducting the survey. That is what is called house listing operations. So that will commence on 1st April 2026, which has been announced by the Registrar General of India. And this is going to be the first phase of the 16th decennial census. 16th decennial in the sense that after 10 years we conduct a census. It is a decadal exercise, though this census has been delayed. Why? Because of COVID, this had been delayed, this census, and this is going to be the 16th census. Kind of, yes, Chetan. Not even rating, but we're going to make a list of, what kind of houses are there, or what kind of amenities are present in the houses, and accordingly, we are going to then select a sample out of that. ठीक है, so we are basically forming a list. Start date is 1st April 2026. Now the census is going to be conducted in two phases. Okay? The first phase is house listing operation, collecting of housing and amenities data, first of all. Second phase is going to be population enumeration, which is going to begin on 1st February 2027. Fine. There are over 3.4 million enumerators and supervisors who are going to conduct the surveys, plus 0.13 million functionaries are going to be there. Caste enumeration will also be included. We saw that caste, this is going to be the first caste census also. Okay? The census will use mobile applications also. It will offer self-enumeration options as well, and states must finalize the administrative boundary changes by 31st December 2025. Fine. So when will the house listing operation of census 2026 begin in India? 1st March 2026, 1st January 2026, 1st March 2026, 1st April, or 1st February 2027. What is the answer? What is the answer to this question? Quickly, everyone, I want quick answers from all of you. What is the answer? Yes, absolutely correct. 1st April 2026. Okay, so Finance Ministry has asked public sector banks to monetize investments in arms via listing. Here I want to ask you, what do you mean by monetizing investments? What is the meaning of monetizing investments? What is the meaning of monetizing investments? Hanji, what is the meaning of monetizing investment? When we say that finance ministry is asking the public sector banks to monetize investments in arms via listing. So what is the meaning of this monetize investments? Rahul is saying making them liquid, illiquid assets converted into liquid ones. Acha, anyone else? Non-revenue generate into cash, Bhakti is saying. See, sometimes what happens is we have investments, we have some assets, in fact. We have certain assets which can generate us revenue if we monetize them, or say if we lease them out. We have certain assets जो ऐसे ही पड़े हैं and we are not utilizing them only. But if we put it into use, or if we lease it out, then we can generate some income. ठीक है? Then we can generate some income. So when we convert an asset into a form of revenue generation, that is what is called monetizing and invest. Okay, so we have certain assets with us, but we are not utilizing them. We put them into use to generate revenue. That is what is called monetizing of investments. Convert into cash, that is securitization. Monetization means PPE से FEB, future economic benefits generate करने in the form of revenue. So basically, in short, assets जो हमारे पास ऐसे ही पड़े हैं, idle पड़े हैं, we try to lease it out, we try to list them. अब यहाँ पे क्या करें, listing करने से हम list करें इन्हें, ठीक है, इन्हें use में लेकर आए जो assets हमारे पास पड़े हैं, and so that they can generate revenue to us. It's not like we are giving up the ownership. We're not giving up the ownership of the asset. We just maybe leasing it out to generate revenue. So, Finance Ministry has advised public sector banks to monetize their investments by listing profitable subsidiaries and joint ventures on stock exchanges. Okay, so what they are saying is list karo profitable subsidiaries ko, joint ventures ko on the stock exchanges after scaling up the operations. Okay? About 15 subsidiaries or joint ventures of PSBs are being considered for IPOs or divestment. So for IPO, they are saying ki list karo bhai, generate karo revenue, list them in the stock exchange so that we can generate more revenue. If some subsidiaries are doing well, then list them on the stock exchange, and so that we can generate more revenue. Okay, PSBs should invest further in these arms to enhance their value before listing. SBI may consider SBI General Insurance and SBI Payment Services for this. Banks must improve the governance, efficiency, decision making before monetization. Okay, and if you see that SBI General Insurance earned 509 crore profit in financial year 24-25. So what has the Finance Ministry advised public sector banks to do regarding their subsidiaries? Merge them with private banks, list them on stock exchanges after scaling operations, close down unprofitable ones, or convert them into NBFCs. I hope you've understood the meaning of monetizing. So I explained you monetizing in general terms. Monetizing an asset means we try to generate revenue out of those assets. And here what we are saying is that we need to list these good performing or well performing public sector bank subsidiaries on the stock exchanges, list them so that we can generate more revenue. ठीक है? So all of you have given me B as the answer. That is absolutely correct. List them on stock exchanges after scaling operations. Absolutely correct. Indian consumer habits cannot be second guessed as they evolve. So here we're talking about consumption habits of the people. We're talking about consumption habits of the people in India. This article is saying that our consumer habits, it cannot be second guessed because they are of an evolving nature, because they are evolving from time to time. So Indian consumer habits, they have significantly evolved. Why? Due to health consciousness, lifestyle changes, post-pandemic effects. There's a shift away from sugary drinks and hard liquor. There's a rise in prepared meals, mixed signals in personal care products. Hard liquor declined by 29.2%, but wine consumption rose because there is this mental, or you can say there's a psychological thing that wine is better off and it is kind of good for health also. A little, if in moderation, if it is used, then it's good for health. Okay, so they are shifting from hard liquor to wine consumption. Growing shift from aerated drinks and maida to healthier alternatives like coarse cereals. People are preferring healthier alternatives. Coffee consumption rose 13.9% and it has become a trendy beverage. Online food delivery surged with prepared meals up by 180%, and that is, I think, mostly because women are also working. Men and women both are working in a household, so you can say that one reason for online food delivery is and prepared meals is has increased 180% because of maybe increasing women in the workforce. If we talk about the personal care segment, it has shown mixed results. Toothpaste is up by 58.3%, but shampoo is down by 30.3%. So, which of the following consumer product trends has been seen the highest percentage increase in India as per the article? Which consumer product trend has seen the highest percentage? 180 percentage we saw an increase. Prepared meals, wine, shampoo, or coffee? What is the answer? 180% increase we saw. And we also saw the reason. We also saw the reason that, the women are maybe entering the workforce. Both men and women are working, and therefore there's an increase in cooked meals, prepared meals. Okay, absolutely correct, everyone. Prepared meals is the correct answer. Good. Okay. Have we been overcounting the output of our informal sector? Again, we have this very important article related to informal sector. Now, if you see, since the previous 3-4 classes, we've been having article related to the informal sector. Hai? We've been articles related to the informal sector. We're having them. That means, there is a possibility that we might get a question, a long answer question related to this. It can be in any form. Hai? So, this article is suggesting that India may be overcounting the output from the informal sector. They're saying that there are outdated methods, proxy-based estimates like GVA per worker, gross value added per worker, which may inflate the real value addition, especially in the urban trade sector. So, proxy-based estimates mean that when you do not have an exact estimate, then you use a proxy variable. You try to give it a dummy variable or a proxy variable when you cannot measure it directly. So, what is the author over here saying? That we are utilizing outdated methods and approximate estimates, like what, like GVA per worker, that a particular worker, how much value addition is one particular worker doing, which is an outdated method. Informal sector contributes approximately 45% to India's GVA and 75% of non-agriculture employment. Value added for many sectors estimated using GVA per worker into workforce. So how do we calculate the gross value added per worker? एक वर्कर कितना ऐड कर रहा है into the total workforce in the informal sector. That is how we calculate the value added. And estimates are based on 2011-12 national sample survey, which are possibly outdated. Urban informal trade sector is overestimated. That is what this article is saying. ठीक है, GVA per worker for directory establishments is 2.4 times higher than non-directory units. Experts are saying that we need to revise the base year data and we need to bring in more accurate estimation techniques. So according to the article, which sector's output may be overestimated due to reliance on outdated statistical methods? Formal manufacturing sector, rural agriculture sector, urban informal trade sector, or the public administration sector? What is the answer? What is the answer? Which sector's output may be overestimated because of reliance on outdated statistical methods? Hanji, Bhakti and Aryan have given me an answer. What about others? What about others? Parkhi, Chetan, Indranil, Rahul. C is absolutely the correct answer. Urban informal trade sector. ठीक है? चलो. RBI's mandate looks unlikely to include climate change. Okay, so we have this article over here that many central banks globally, they are integrating climate change into their policy mandates. Okay, so global central banks, central bank of different countries, foreign countries, they are including climate change in their policy mandate, but RBI is unlikely to do so. And why? What is the reason given over here? Because of the slow legislative process in India. So RBI is working on integrating climate related risks through other regulatory and disclosure measures, not directly. Okay? So current mandate of RBI, what is the current mandate of RBI? Price stability and currency management, including climate change, requires amending the RBI Act, and that is a very lengthy and political process. And because of this legislative process, which is very long, which is very lengthy, that is why RBI, might not include this climate change. RBI released a draft disclosure framework in February 2024 to assess financial climate risk for regulated entities, and some countries like Malaysia, New Zealand, Singapore, they have explicit sustainability mandates of their central bank. For India, in the RBI is not, going to do that. Why? Because of this lengthy legislative process. Okay, so RBI is saying that it is adopting a slow but cautious approach and focusing on the risk frameworks over legislative changes. So why is the RBI unlikely to include climate change in its formal mandate soon? Formal mandate. India doesn't face climate risks. RBI lacks institutional expertise. IMF guidelines prohibit it, or amending the RBI Act is a lengthy legislative process. What is the answer? Absolutely correct. Amending the RBI Act is a lengthy legislative process, and that is why currently it will not be included in the formal mandate. It is going to informally try to bring in certain changes through the other regulatory bodies. ठीक है? Now, very, very important article over here. Why gold price swings distort the inflation trends. So, gold prices, we've seen that they are very volatile. As of now, gold prices are so volatile. They are literally surging beyond, beyond, certain understandable limits. And that is because of the geopolitical tensions, volatility and all, which is happening. So this article is highlighting how volatile gold prices are skewing India's core inflation measurements, because in core inflation usually we how do we calculate core inflation? We subtract from headline inflation. What do we subtract from headline inflation? we subtract, food, fuel, and energy, usually, mostly. But what we are saying is that we need to exclude gold prices also. Gold prices should also be excluded from headline inflation in order to get a clear scenario of core inflation. Why? Because gold prices are also very volatile. So, with gold having a significant weight in the CPI, Consumer Price Index, its international price fluctuations are causing distortions in the domestic inflation trends, and that is why we should exclude this also. Okay, and experts are suggesting that removing gold from core inflation basket so that we can have more accurate readings. So gold's weight, what is the gold's weight in the CPI basket? It is 1.08%, which is 20th highest among 299 items. Gold inflation has surged recently due to global economic uncertainty. Core inflation would be significantly lower, 3.46% without gold compared to 4.2% in May 2025. So we can see the significant difference. So gold is one of the most volatile items in CPI. India ranks among the top global consumer of gold, both jewelry and bars, and therefore, in order to get a clear picture, we should exclude gold prices also from headline inflation in order to get core inflation. So, why are experts recommending the removal of gold from India's core inflation basket? Gold prices are influenced by food and fuel prices. Gold prices are highly volatile and distort core inflation readings. Gold is not widely consumed in India, or gold contributes nothing to inflation. What is the answer? Absolutely correct. Gold prices are highly volatile and they distort core inflation readings. Absolutely correct. Okay. Next important article we have over here. Cloud of external factors may rain on growth. This is according to RBI. So RBI has warned that external factors like geopolitical tensions, global fragmentation, weather-related events that might, affect India's growth. India might not remain as resilient as we are seeing as of now. Though, despite these global issues, India's domestic fundamentals are strong. Inflation is also in control, backed by a resilient banking system. But for how long? This article is saying. ठीक है, so RBI governor has warned of risks from these global tensions because of this Israel-Iran conflict, though that's on a halt, but you never know. Climate change, tariffs. India's banking system is robust, no doubt. Inflation is easing. CPI inflation fell to 2.8%, 2.82% in April 2025. And RBI is forecasting a medium-term inflation near 4%, growth around 7%. So India remains a key global growth driver despite these headwinds, but there are obviously still some risks. So what is one of the key concerns highlighted by RBI that could impact India's growth? A rise in local unemployment, decline in banking sector stability, spillover from global geopolitical and weather related events, fall in domestic agricultural output. Hanji, what is the answer? Yes, absolutely correct. Spillover from global geopolitical and weather related events. Right? Okay. So, next article we have April to May fiscal deficit down as non tax revenue grows. So, what we are seeing is that fiscal deficit, which is the excess, fiscal deficit is the excess of expenditure over the receipts excluding borrowings, right? That is fiscal deficit, excess of expenditure over receipts in short. Now, this fiscal deficit is reducing, and what is the reason that they are giving here? That non tax revenue has been growing. See, sources of revenue can be tax as a source of revenue and non tax revenue. Can anyone give me example of non tax revenue? Tax revenue to ho gaya that we have levied a particular tax, say income tax of 10%, so that 10% tax we are getting. That is tax revenue. The amount that you earn through levying taxes. What do you mean by non-tax revenue? Can anyone give me an example of non-tax revenue of the government? which is not a tax but it is a revenue for the government. Bruce is saying tolls vasuli. Acha, okay. But that toll, if through the tolls, just say if the private sector or a private sector company has made that road, for example, and as the government has given a contract to a private sector company, that private sector company has made that road. So tolls are basically to recover the amount of money that this private sector has also put up. Henny? So anything else? Dividends from PSUs, exactly. Non-tax revenue would be dividends from the PSUs. Fines imposed by traffic police, fines हो गया, exactly. Fees हो गया, right? Yes. RBI से dividends हो गया, exactly. These are some examples of non-tax revenue of the government. Very. ठीक है? So India's fiscal deficit for April to May 25-26 has dropped to 0.8%, lowest level since records began in 1997. And this improvement is due to a sharp increase in the non-tax revenue and controlled capital spending. So our capital spending is controlled, and along with that our non-tax revenue is also increasing. Okay? So lower fiscal deficit is in the first 2 months since April 1997, lowest fiscal deficit, which is a very good thing. Okay? Non-tax revenue surged to 3.57 trillion rupees, and that is mainly due to RBI dividend and capital receipts. We've seen that RBI has given a huge amount of dividend to the government. You know? Revenue receipts rose 23.9% year on year. Expenditure grew only 7.4%. So you can see this difference between 29.3% and 7.4%. Government maintains financial year 26 fiscal deficit target at 4.4% of GDP. So what is the primary reason for the drop in fiscal deficit during April to May 2025? Decrease in defense spending, highest GST collections, lower capital expenditure, or rise in non-tax revenue, especially from RBI dividend? What is the answer? What is the reason for a drop in fiscal deficit? Yes, rise in non-tax revenue, especially from RBI dividend. Very. Industrial output rises 1.2% in May, which is slowest in 9 months. So we have this India's industrial production, which rose just 1.2% in May, which is the slowest in 9 months. The weak growth was due to declining momentum in manufacturing, contraction in mining and electricity output, reflecting an uneven and fragile recovery. So manufacturing sector mein we are seeing a slow recovery. It is 1.2%, which is down from 6.23% in May 24. Manufacturing output rose 2.6%, which is much lower than last year. Mining output, where you can see a decline of 0.1%. Electricity, where minus 5.8%. Capital growth showed capital goods showed a robust growth, 14.1%. Consumer durables and primary goods sectors were also weak. Volatile trends shows inconsistency in industrial recovery. So, what is the primary reason for the slowest industrial output growth in May 2025? Rise in global oil prices, surge in capital goods production, contraction in mining and electricity output, high base effect from last year. What is the answer? What is the answer? Anji, all of you, Indraneel, Aryan, Bruce, Parkhi, Rahul, what is the answer? Right. Contraction in mining and electricity. Okay? India's bond index momentum falters as foreign inflows stall. So here we're talking about this JP Morgan's emerging market bond index. So what is this emerging JP Morgan's? India was included in this JP Morgan emerging market bond index on an international level in 2023. So India was included in this. That means now this index is also going to track India's bonds. Okay, how are the prices going and all? This index will track in India will also be a part of this track now. Okay. So initially, in our inclusion boosted foreign investments, but now this momentum has slowed. So there has been a $20 billion inflow as of now, but there have been a lot of outflows also. Weak rupee we've seen, because of which investor interest has dampened. So India, when did India join this JP Morgan's EM Emerging Market Bond Index? In June 23. Okay, Indian bonds underperformed other emerging markets, 2% return versus 5%. There's weaknesses in the Indian rupee, reduced monetary easing, which led to outflows. Structural reforms are needed before India joins another major debt index in September. Okay? So, what is the main factor holding back India's bond index momentum? High fiscal deficit, strong capital outflows from India, weak Indian currency relative to Asian peers, or RBI's aggressive rate hikes? What's the answer? What is the answer to this question? Hanji, what is the answer? Yes. Uh, the answer is C, weak Indian currency relative to the Asian peers. Okay? RBI projects a marginal rise in bank bad loans by financial year 27. So RBI is saying RBI stress test projects. These stress tests are conducted by RBI. What are these stress tests? That how is a bank going to perform if there is any kind of crisis? For that, tests are conducted. है ना? Just like a drill. Just like a drill. ठीक है? Mock drill type. These are what are called stress test projects. Now, this stress test, they are projecting that the gross NPAs ratio of the top 46 bands, it could rise marginally from 2.3% in March 2025 to 2.5% by March 2027. Okay? And despite this, banks are expected to maintain adequate capital buffers. So, it might increase from 2.3 to 2.5% by financial year 27. And in a severe stress scenario, gross NPAs, they even might rise to 5.6%. Capital adequacy is strong, which is projected at 17.2%, which is good. Capital buffer should be there. Under extreme adverse conditions, GNPAs could go up to 6.9% gross NPAs. But no bank is expected to fall short of capital requirements, and these stress tests, they stimulate shocks from macroeconomic liquidity and credit market disruption. So what is the projected gross NPA ratio for Indian banks by financial year 27 under the baseline scenario? 5.6%, 2.5%, 3.2%, or 6.9%? What is the answer? Projected gross NPA ratio for Indian banks by financial year 27. Hanji. Only Aryan has given me the answer. What about others? Bhakti, Chetan, Indraneel, Rahul? Right. 2.5%. It's not 5.6% Chetan, 2.5%. Okay. So marginally we are seeing from 2.3% to 2.5%. A marginal increase in gross NPAs by financial year 27. Okay, India to seek more funds for poor nations at global needs. So, Nirmala Sitharaman, our finance minister, she's been attending many global meetings, including the UN Financing for Development, NDB annual meet. So, what this article is saying is that our finance minister will advocate for increased financial support to the developing countries. Okay, reforms in development banks, enhance private sector participation in sustainable development. So she's on an official visit from 30th June to 5th July. She's going to attend UN conference in Seville, NDB meet in Rio de Janeiro, the BRICS finance ministers meeting also, and she'll deliver a keynote at the UN summit on mobilizing private capital. Okay, she's going to also emphasize on reforms to international financial architecture, that we need to address certain challenges like protectionism, unilateralism, limited capital access. Okay, so India is going to push for stronger developmental banks tailored for this global south. Okay, so what is the primary focus of FM Nirmala Sitharaman's keynote address at the UN summit in Seville, reducing trade barriers, expanding BRICS membership, increasing tax revenues in developing countries, or mobilizing private capital for sustainable development? What is the answer? Hanji. What about others? Bhakti and Aryan have given me D as the answer. What about others? Indraneel, Chetan. Absolutely correct. Mobilizing private capital for sustainable development. India's economy is still awaiting for a revival of animal spirits. What is the meaning of animal spirits over here? Does anyone know? What is the meaning of animal spirits? Very important, interesting article. In economics, we talk about animal spirit. What do you mean by animal spirit? Anyone? Emotions like bull, bear, stag, whale, dow dogs. Uh, Kind of, you can say that, but a revival of animal spirits. Let's try and understand what this article is saying. Okay, let's try and understand. Emotional factors influence economic behavior. Yes, Bhakti, that is also, that is also fine. Animal spirit in that sense. But here, what this article is trying to explain is that despite ample liquidity and lower borrowing costs, India's private sector remains very cautious in expanding investment. Okay, so here what we are saying is that the private sector is still very cautious. That we are not animal spirit is usually when we say is when we are when they are very optimistic, working in animal spirit that they are going to invest or they are going to be optimistic. They are going to their behavior will be on the optimism or on the positive side over here. But here what we are saying is that uh, India's private sector remains very cautious. It is still not focusing on expanding investment. Here, what we are saying is that credit growth alone is not translating into the new private capital formation. That though people are taking in loans, but this money is not being utilized in capital formation or investment purposes. Major industrial groups are hesitant due to economic uncertainties and past crises. Because survival of animal spirits is needed. That is what we are trying to say here, wherein we are going to talk about that there should be confident investment, there should be bold investment. Okay, so in short, animal spirits is basically when we focus on optimism, when we focus on, when we focus on giving a push, okay, to something. Okay? Yes, exactly in the range. So people are taking loans more for expenditure purposes, or you can say for consumption purposes. Loans are mostly taken for consumption purposes usually now. So RBI has slashed rates, injected liquidity, but still we are seeing that private sector capital expenditure is still very weak. Banks' loan exposure to core industries like roads, sports, telecom, construction, it has dropped to just 11%. Industrialists, they are again still risk averse. They're not taking risk, despite cheaper credit, despite demand side, despite providing so much of money to them. Still, they are hesitant. Still, they are being risk averse. Billionaires like Gautam and Adani, they are showing interest, but others like Ambani, Tata, Jindal, they are still facing internal or legal distractions. Therefore, what we are saying is that there should be a revival of animal spirits. There should be a revival in animal spirits is required, which means that there should be confident and bold investment mindset. Global factors like US-China trade tension, geopolitical uncertainty, they've also added to this hesitance. Fine. So what does the article suggest is necessary to revive India's private sector investment momentum? Higher foreign reserves, more government subsidies, revival of business confidence or animal spirits, increase in agricultural productivity. Consumption and not income generating loans. Exactly. Exactly. Chetan. Yes, absolutely correct. Revival of business confidence or animal spirits. Okay, so that is all from my side, everyone. Thank you so much to all of you. I hope you understood. I hope this session was beneficial for you. If you want to connect with me beyond these sessions, then Mannat Educator is my Telegram handle. You can connect with me over here. If there's anything that you want to ask, you can ask me in the comment section. Otherwise, you're going to end the session over here. Till then, keep studying. All the best to all of you. And I will see you again tomorrow with the next important articles. I did not take up a class on Wednesday yesterday. That is why we have conducted this class today. So tomorrow we are going to take another session. Thank you so much, Chetan. Okay, Indranil, everyone, you have a good day. Keep studying. All the best, and see you all in my next one. Today, 4 p.m., 7 p.m. I am going to take up classes. I will, share the link in my Telegram group so you guys can attend. So let's meet at 4 p.m. Let's also meet at 7 p.m. And that is all. Thank you so much. Have a good day. Keep studying, and all the best. Bye bye.